Ever pore over financial reports or industry news and feel like you need a secret handshake just to uh, figure out what's actually going on? Especially with airlines, it's been quite a ride lately.
Oh, absolutely. It can feel, well, pretty overwhelming sometimes.
Yeah.
So much data, different angles, and analysts don't always agree, do they?
Exactly. That's why today we're doing a deep dive into two specific Thai airlines, Bangkok Airways, that's BA, and Asia Aviation, AAV, looking at their recent performance and what the outlook might be.
Yeah, and we've got a couple of key sources here. Recent analyst reports, one from Krungsri Securities on BA and another from Kingsford Securities on AAV. Pretty detailed stuff.
And we also have a little snippet from Forbes just to give us that, wider global market picture.
So our mission really is to cut through the jargon, unpack the key numbers from these reports, and try to understand what these experts think is important right now.
Right. The goal is to get you informed and quickly, whether you're watching these specific stocks or just trying to get a better handle on the airline sector itself.
Let's get into it.
Okay, let's unpack BA first. Bangkok Airways, we've got this Krungsri Securities report. It's dated May 14th, 2024, and the big headline is a buy rating.
That's right, a buy. And they put a target price on it of THB 24.25. Now compare that to the share price when they wrote the report, which was THB 18.10.
Okay.
That implies a potential upside of about 34%. So quite a significant gap there.
34% potential upside. Yeah, that's a strong call. What do the analysts actually see in BA's numbers to make them feel so positive?
Well, they really dug into the first quarter 2024 results. And the key thing really was how much BA beat Krungsri's own forecasts for that quarter.
Okay, so they outperformed expectations.
Significantly. It wasn't just a small beat. Look at this. Sales were 11% higher than the estimated. Gross profit, a huge 37% higher.
Wow.
But the really striking one, I think, was the normal profit.
Normal profit. That's the profit from the core airline operations, right? Excluding any sort of one-offs.
Exactly. And in Q1 2024, BA's normal profit came in a massive 76% higher than Krungsri had penciled in. 76%. Net profit was also way up. 70% higher?
That kind of beat, especially on the core profit, that must mean their margins look pretty good too.
Absolutely. It flows right through. The report shows the gross profit margin hit 38.6% in Q1. They'd only estimated 31.3%.
Big difference.
And the normal profit margin was 25%. Again, way higher than their 15.8% forecast. So yeah, much better profitability than expected.
Okay, operationally then. What were the trends? The report tracks things like passenger numbers over time, right?
Yeah.
From 2021.
It does. And you see pretty consistent growth in passengers. In Q1 2024, they hit 1.3 million passengers. That's up 17% compared to the same quarter last year. And interestingly, up 35% just from the previous quarter.
So good momentum there. What about ticket prices?
Also trending up nicely. The average ticket price reached THB 4,406 in Q1 24. That's an 18% jump year on year.
And planes were full. Load factor.
Yeah, load factor was strong. 88% in that quarter. It's also kind of interesting. While passenger numbers are climbing, they've actually reduced their aircraft fleet over time. It seems to have stabilized around 24 planes recently.
Fewer planes, but more passengers and higher prices. Sounds like they're getting more efficient. The report talks about RASK and CASK, right? Revenue and cost per available seat kilometer?
Yes, those are key airline metrics.
Yeah.
And crucially, it looks at passive cap passenger activity per available seat kilometer. This basically tells you if they're making money for every seat they fly 1 kilometer.
Yeah, and how did that look for BA?
Well, the report highlights that this PASCAC figure actually turned positive for BA around the first quarter of 2023. And by Q1 2024, it had reached THB 1.87.
So turning positive and climbing, that sounds fundamental.
It really is. It shows the core unit economics of flying are working in their favor.
Okay, looking ahead now, what did Krungsri forecast? Continued growth.
They projected continued revenue growth, through 2024, 25, and 26. But interestingly, the forecast for earnings per share, EPS, profit per share, that was projected to dip slightly in 2024 and 2025. That's after a really strong 2023. Then it's forecast to tick back up a bit in 2026.
Okay, so revenue up, but maybe profit per share takes a breather after a big year. What about valuation? How did the stock look compared to its history?
It's a bit of a mixed picture, actually. The report pointed out its trailing price-to-earnings ratio, PE, was about 12.2 times. That was actually below its historical average of around 23 times.
So cheaper based on recent earnings.
Right. But then you look at price-to-book value, PBV, which compares the share price to the company's net assets.
Yeah.
That was 2.24 times, which was above its historical average of 1.25 times.
So cheaper on earnings, but maybe pricier compared to its assets, historically speaking. Interesting divergence.
Yeah, it happens. Valuation isn't always straightforward.
Huh.
The report also just quickly mentioned where BA stood compared to peers in Kronesry's view back in May 24. They had BA as buy, AAV also as buy, and Airports of Thailand, AOT, as neutral.
Got it. And any mention of ESG, environmental, social governance factors.
Just briefly. Go to BA got a BBB rating in the set ESG ratings for 2023. And they've declared participation in the Thai Anti-Corruption Coalition, the SICAC.
Okay, so summing up BA based on that May 2024 Krongsry report, strong recent performance, beating expectations, driving good margins and profitability per unit, leading to that buy call, even with maybe some mixed signals on historical valuation.
It's a pretty good summary, yeah. A positive picture painted back then.
All right, now let's switch gears. Let's talk about Asia Aviation, AAV. We've got a more recent report here from Kingsford Securities dated May 19th, 2025.
Right, newer report.
Yeah.
And a different recommendation here. Kingsford rates AAV as a hold.
A hold. And you mentioned this was actually a change.
Yeah, previously they had it as buy speculate. So they pulled back a bit on their optimism. Their target price in this May 25 report is THB 1.65. The stock was trading around THB 1.24 when the report came out.
Okay, so still some implied upside, but a more cautious hold rating overall. Let's dig in. What did their analysis of AAV's Q1 2025 results show? Why the caution?
Well, on the surface, AAV reported a strong net profit, 1.4 billion THB in Q1 2025. That was a big jump from the previous quarter and a turnaround from a loss in Q1 the year before. Looks good, right?
Sounds great. But I sense there's a but coming.
There is. The Kingsford report digs a bit deeper. They point out that if you strip out special items, and the main one was a gain of about 111 million THB from foreign exchange.
FX gains, not really core operations.
Exactly. If you look at the normal profit, the profit from just flying planes, that was 1.3 billion THB. And while that's still profitable, it had actually slowed down compared to both the previous quarter and the same quarter last year.
Okay, that's a crucial distinction. So the headline number got a boost from something non-operational, while the core business momentum might have eased off a bit.
Precisely. That seems to be the analyst's key observation there. Looking at the operational stats for Q1 25, passenger numbers were 5.6 million. That's up only slightly, like 1% from the previous quarter, 2% year-on-year.
So less growth momentum than we saw with BA in their report.
Yeah, more modest growth. Flights were up a bit. Available seat kilometers, ASK, that capacity measure, also up slightly.
What about load factor and ticket prices for AAV?
Load factor was still high, 87%. Very similar to BA, actually. But the average ticket price, that's different. It was THB 1,945 in Q1 25. And that was actually down slightly, about 2% from the previous quarter, and down 8% compared to the year before.
Lower average fares. That would impact revenue, wouldn't it?
It did. Total revenue was basically flat quarter-on-quarter and down 4% year-on-year. Ancillary revenue, things like baggage fees, was up a little bit, but not enough to offset the lower fares.
And costs. Any good news there?
Some. The report notes cost of sales was down 8% year-on-year. Lower fuel prices helped there, which is always a plus for airlines.
Okay, and margins?
Gross profit margin was 22.4% in Q1 25. That was actually down a bit from the previous quarter, but up compared to Q1 24. They did note an increase in SG&A costs, though, things like admin and selling expenses, which they linked to advertising.
Right. Now, this is interesting. The difference between what AAV management is aiming for in 2025 and what the Kingsford analyst thinks is likely. What's management saying?
Well, according to this May 25 report, management was sticking to its guns, targeting 15% revenue growth for the full year 2025 and aiming for 23 to 24 million passengers.
15% growth. That sounds quite ambitious, especially if Q1 revenue is down year-on-year.
It does. Their plan involves boosting capacity, significantly increasing ASK to 28,500 million seat kilometers, and expanding the fleet from 60 planes at the end of 2024 to 66, with 63 actually flying.
Where are they putting these extra planes?
They plan to focus more on domestic routes. They had a pretty strong market share there, 42% in March 2025, and also on international routes within Asia. They specifically mentioned using Fifth Freedom rights.
The right to fly between two foreign countries.
Yeah, as part of a route starting or ending in Thailand. They talked about connections like Taiwan and Hong Kong, maybe to try and offset the slower than expected recovery in passengers coming from mainland China.
Okay, so management has a clear growth plan. More planes, more capacity, target specific routes. But you said the analyst isn't buying it quite as much.
No, Kingsford is definitely more conservative. The analyst is forecasting only about 2% revenue growth year-on-year for 2025. And passenger numbers, maybe 22 to 23 million. So just touching the bottom end of management's target range.
Why such a big difference? Why the analyst caution?
The report gives a few reasons. One is that persistent slow recovery in the Chinese market, which is important for them. Another is apparently limited scope to increase flight quotas to India, another key potential growth market.
Okay.
And third, they see potential for more price competition heating up in the domestic market as overall capacity recovers. So maybe harder to maintain those ticket prices.
Right. More competition could pressure fares. So those concerns lead the analysts to, lower their profit forecast?
Yes. They actually reduced their forecast for AAV's normal profit for 2025. They now expect it to be down 21% compared to 2024, before maybe bouncing back about 10% in 2026.
Wow, a 21% drop in core profit forecast for 2025. That explains the hold rating. Does the report expect them to pay dividends?
No. The forecasts show profitability for 2025 and 2026, but zero dividends per share. DPS 0.00.
And ESG for AAV, did Kingsford mention that?
They did. Listed some scores from ESG rating agencies like Morningstar Sustainalytics, ESG book Refinitiv, highlighted AAV's focus on environmental things like CORSIA, that's the carbon offsetting scheme, and CO2 targets based on 2019 levels. Socially, a big focus on safety, policies, training, and governance-wise, following CG principles, SET, and SEC guidelines. They also noted AAV got a B rating, which is very good, in the Thai IoT governance report for 2024, and they've also declared for the Thai SOC anti-corruption group.
Okay, so we've looked at these two reports, Krungsri on BA from May 24, Kingsford on AAV from May 25, different times, different data, and yeah, different pictures emerging.
Definitely. For BA, back in May 24, Krungsri saw this really strong operational performance, especially that core normal profit just blowing past expectations. That really underpinned their buy rating.
Right. But for AAV, looking at the Q1 25 data, Kingsford saw a strong headline profit, the net profit. But when they dug down,
they saw the core operational profit had actually slowed down.
Yeah.
And that headline number was flattered by that FX gain, a non-core item.
And that, combined with their worries about China, India, domestic competition, and the gap between their forecasts and management's targets, led them to that more cautious hold recommendation.
Exactly. And it's worth remembering, like you said, the broader context. That Forbes Thailand snippet mentioning IATA's forecast, global airline revenue possibly exceeding $1 trillion in 2025.
$1 trillion. Yeah, it just shows the huge scale of this industry they're operating in. There's potential for overall recovery and growth, even while individual airlines like BA and AAV face their own specific challenges and analyst viewpoints.
Big picture matters.
So let's try and distill this. We've navigated the reports. What does it all mean for you listening in?
Well, I think we've seen two quite different analyst perspectives, haven't we? For BA, the story from Krungsri was really about a powerful operational rebound in early 2024. Passengers up, ticket prices up, and crucially, that profitability per unit, the PSK, looking strong. That drove the optimism.
Yeah, performance exceeding expectations was key there. But for AAV, the Kingsford report highlighted a different scenario, a Q1 2025, where the top-line net profit looked good, but the underlying operational profit maybe wasn't quite as robust, partly masked by that FX gain.
Right. And the analyst's caution there seems rooted in external factors, the pace of market recovery in places like China, potential price wars at home. It creates this gap between the analyst's forecast and management's, frankly, quite bullish targets, even with those fleet expansion plans.
So understanding these nuances, like the difference between net and normal profit, or what a metric like PASK actually tells you about efficiency, or how much forecasts depend on assumptions about specific markets like China, it helps you see beyond just the simple buy or hold, doesn't it?
Absolutely. It shows you need to look under the hood. You see how things like operational efficiency, the speed of market recovery, even non-operational stuff like currency swings can all impact the numbers and how analysts interpret them.
And it also really highlights that difference in perspective you can get between company management, who might be setting ambitious targets, and analysts who might take a more, shall we say, cautious view based on perceived risks.
That tension is always there. It shows internal execution meeting external headwinds, perhaps.
So we've seen these two distinct views. One, buy for BA, driven by recent results surprising to the upside. One, hold for AAV, reflecting concerns about market risks and growth achievability despite management's plans. It really makes you wonder, in an industry like airlines, so connected to global tourism, fuel prices, economic swings, how much control does an individual airline actually have over its own destiny versus just being carried along by these huge external tides?
That's the million-dollar question, isn't it? Or maybe the trillion-dollar question. given those industry revenue forecasts. How much is management skill versus just being in the right place when the tide turns? Something to think about.